Hey guys, what's going on? Coming at you with a Friday morning video. Today I want to talk about a stock that is newer to me. I started buying this about 2 weeks ago, so this is like a brand new position. As you guys know, I actually sold my Berkshire and Apple. At this point, the Apple share that I sold looked great. Well, multiple shares, but it was a long-term, they were both long-term investments. Started both those in 2019, so I took long-term gains on them and rolled them into other things. This is a perfect example why, obviously Apple's a $3 trillion market cap, so they're the biggest stock in the US market basically. And they're held to super high expectations. And we're seeing, telltale signs of maybe the consumer dialing it back a little bit. And to be honest, Apple doesn't really have great products, but no, they do have great products, but their newest one, there's really nothing super exciting other than like a longer battery. So anyways, that's one of the reasons I exited that position. That's another story for another video. But yeah, so I actually, Nvidia I want to talk about today. Ticker is Nvda. They're a big graphics player. So the stock actually went down to $212.17. I actually bought yesterday at $215.72. So I drove down my cost base, and my new cost base is $228.44. I started buying this stock, I think around 240, 235-ish. So I'm just slowly chipping at it. I bought roughly about 15%. So it's a newer position, so I buy a little heavier when it's a newer position. So I bought 15% of my initial buy, and I'll slowly chip at it as it keeps going down. If it goes to like, I think I have a buy set to like a 200-ish level. So if it gets to that, it would actually be below 6-month lows. It's basically at 6 months lows now. This stock had a crazy rally. I love this stock for the long term. They're super profitable, double-digit growth. They're a disruptive company, for the future. They're going to be so involved with metaverse, probably with crypto, with computers, hardware, gaming, graphics. Like, this is just a disruptive business model that's going to be around for decades. So it's kind of a company that I wanted to be involved in and start a position now because I see an opportunity as it came off its 52-week highs. I never buy when a stock's like at the 52-week highs or keeps rallying. It's just never really a good idea in my opinion. So yeah, this is a new position. I bought today at 215. My cost base is 228.44. Personally, I think it's a great time to buy if you're not in it. So the Dow finished down 0.23%, S&P finished down 1.21%, Nasdaq finished down 2.14%. My portfolio as a whole closed minus 3.03%. So I had obviously the most pain of the indices today. So we could say I lost the most money of anything, but that's okay. Most of my mid and small caps are getting hammered right now in this market. The market kind of yesterday started out with like a fake little rally at the beginning of the day, and then it just bled off throughout the entire day, and then closed. It had a really nasty sell-off. So that's just, Wall Street taking their profits, so it is what it is. So the the S&P is sitting at 4,392. So if you look at the SPY, it's sitting currently basically at 439. I ran a Fibonacci retracement. If you don't know what that is, basically you can run a tracement of, it makes lines from 100 to 0. So I took the 52-week highs of the market, which was the first couple days of January, wherever that peak was. And then I took the March 14th lows around 420. So I don't think it's going back down to 420, bearing some terrible news. We roll into a recession and the Fed rate hikes, rug pulls us, the whole line. I don't think that's going to happen. So if it went to example 420, right, the Fibonacci tracement would be at 0%. That means you're basically at the bottom of the lows. I don't think it's going to get there. 23% would be 429. So we're literally within I think it's at 430 right now. So we're basically at this line and we're going to test this. I think this is, in my opinion, going to be the bottom. It's going to just get stuck around here. The reason it probably had a really long sell-off, obviously we got the war with Ukraine. We just had bank earnings come out. They were a little sketchy with consumers, and they're not really sure, the uncertainty. We have inflation running out of control, and the market is closed today. So we have a long extended weekend. So usually when there's long extended weekends, people don't like they like taking their money out if you're a day or swing trader or want to see what goes on over the weekend, and then they assess coming Monday. As a long-term investor, I mean, if there's good deals, I'm going to buy it. So this is a great deal, long-term. And, we're at the 23% Fibonacci retracement level. So we're going to probably test that into Monday, my opinion. And I think this probably will be the bottom, bearing like super, bad news that the Fed or some other global thing would happen. I don't think it's going to happen. So I'm kind of laying my chips on the table and kind of still chipping at it, like my favorite stock. So yeah, so that's really my thoughts. Yeah, the extended weekend, obviously, which we're going into now. Market's closed today. So yeah, so that's kind of my thoughts on Nvidia. And that's what I did today as far as buying. Let me see where I'm at here. So this is a quick one. Okay. So let me just grab my phone real quick. So some things that, let's see, just my portfolio, just some notable things. Affirm got completely destroyed today. It pulled back 8%. It almost lost its entire rally from March 14th. It's almost, well, not almost, but it's pretty close to its bottom. So it almost retraced back a whole month in gains, which is fine. It ran up to $48. It's back down to 35. No big deal. I was buying at the bottom. I did not buy on that rally at all. So I'm glad I didn't. If Affirm goes to around $30, I'd be interested in averaging cost down in my position. I was buying that stock obviously a little over $100 when it pulled back from the Amazon news. So that was a big hit today. What else got hit majorly? Affirm might have been the biggest one. Robinhood pulled back heavy. That was down 4.29%. Stock's just been crushed. The past 3 months, it's kind of just been in between like a $12 and $15 window. It's at 11.38, so it's almost at all, basically 52-week lows. It's, it's right there. It's within like 20 cents away. That got crushed today. What else got hit really hard? Voyager got destroyed today too. That's down 6%. There's a whole lawsuit against them right now. It just keeps getting brought up, and whenever it does, it just causes the stock to sell off. Obviously, this is it's a very small cap stock. The market cap's only $714 million, so that's extremely small. So obviously with the sell-offs and the bank earnings that came out the end of this week, it just kind of, people are very risk off right now. So it's not sustainable. Just like last year when everything was risk on, people were buying, any SPAC, really anything risky they were buying. Now it's a total 180 in the market. So it's not the end of the world. It's just not their time right now. They're great companies. I think they're going to succeed and, grow and do great things in the future. So if you think that, you should be taking advantage of deals like this. It's just, this is a position, usually when I start a new position like Nvidia, I really focus on this because most of my other positions are fully built out to where I want them to be. Obviously, I'm only probably as like where I'd be willing to take this position, I'm like 10% there. So it sounds crazy when I say it that way, but the way I do it, if there's a lot of uncertainty in the market, which there is, there's always room for some like super bad news. And if it does, I'll just aggressively buy more. And then eventually I'll get up to like 100% where I want to get it. Or if it happens to run, it is what it is. And, I have all my other positions built out. So I kind of, once I build them all out, I find, really the next stock I really like. And if something gets super high or whatever, I'll sell it. Like Apple, for example, Berkshire, I sold them in the beginning of like mid-January. And, I rotated the money to new things that I really like for the long term. So that's all I got. I know this is like a little drawn out, a little long, but yeah, so if you guys like this video, I'm going to try keeping, posting daily. I might make a video tomorrow, just on like, investing in, where I think the market's going to go long term. So if you guys are interested in hearing my thoughts of the long term investment strategy I have, I will probably post a little, make a little thing up and explain where my mind is as a long term investor. So finish that, make sure you subscribe to not miss it, and like, and until tomorrow, peace.